Good morning. Today is Monday, July 24, 2023. This week is very special. This week is FOMC meeting week. So we will watch how the price, how price action take place for this week. So we have FOMC meeting on Tuesday and Wednesday, and also we have a GDP release on Thursday. So this week we have a lot of high impact news for this week. So it's very interesting to see how it's play out. So that's our news and the impact we have this week. I want to point out something real quick on the high time frame level. Let's look at the monthly high time frame right here, the M1. You see this order block that in December last year, this is a bearish order block, and you see as soon as this very order block form, you see it's move away that order block. It create a so-called value gap right here, or a bigger one is implied value gap, and then it retests on March and it start going down from there. And then on October last year it make a swing low, and then it go up from there. And so far from March into this month, July, and we are in the last week of July, and I don't think it will be a down close candle for July, so it's going to be an up close candle for July. So basically we have from March to July, they are up close. So it's 1, 2, 3, 4, 5 months in a row is up close. So it's kind of very bullish signal right there. But the tricky part that we see that it's still not break through this bearish order block for last December. So that's interesting. Let's see how it's play out. In order to be called bullish, I believe that it have to go above this order block on the monthly table, break through this and retest, and then go up. But in this case it's not breakthrough, so it's maybe a bullish signal right here. Bullish signal right here, excuse me. Let's go up here, and then it fell to take this is still internal liquidity right here. It's not external yet, so let's see how it's come from here. So that's one of the level that I want to point out this morning. We want to point out this morning on the high time frame monthly. Let's look at the weekly. We have another level right there. The same idea like monthly, right? We have a bearish order block right here. It's around December 20 last year, and you see that so far last week it touched that. That's open order block right there, but it did not close above that. So that can indicate a bullish, the bearish signal right there. Okay, that's how we see. And another high time frame level we want to point out is that you see the fair value gap here, and this is the fair value gap. Sorry, it should be fair value gap low, not high. So basically we want to see if we go down, it may retest this one. Also, I don't think it's gonna for this week. Let's see, and let's see. We need to see what's this one. This one is the open for 4913. fair value gap low is high, and this is a weekly, right? So for weekly we code it with the red or pink color, and for monthly level we use the purple color, so we use color coded. So I believe that because last week it got out there, so if possible we may go and test this Thursday fair gap before it going up right there. That's the bullish signal, or if not it continue to reverse, retracement, and then it turn into reversal right there. So that's a high level of high time frame right there. And now we go for 1 minute time frame. 1 minute time frame. We need to go and draw the new week opening gap. New week opening gap is the ICT concept. You can Google or go to his YouTube. You can see more detail on how he basically the gap between the close of Friday and the open on Sunday, and this level is here. Okay, so this is the new week opening gap high, new week opening gap, high, and what is 19 or 20? Let's just say 19, right? Close 19. Close 19 right there. And then we have another level right here, new week opening gap 95 exactly. Okay, so I think we get all the level we need to watch right there. Okay, and we see that the prior day, last Friday low were taken, so it's buy side liquidity were taken. So if we're gonna go long, then that's a good signal to involve, to get involved right there. And also we need to watch for on the 4-hour time frame. On 4-hour time frame, we need to watch for the Monday. The Monday the Monday 9 o'clock open candle is very important for us to give us some signal. You see, this is the 9 o'clock, and the next one 9 o'clock on Tuesday. So give us some idea right here, and it retracement right here, and it go up, boom. Let's look at Monday right here also. 9 o'clock right here, you see retracement on Tuesday, and retracement on Tuesday at 9 o'clock, but it stay above the Monday, it go up, boom, right there. Give us some idea right there. So let's go back. Okay, I think an accident closed the last one. Close that window. I'll go back to 1 minute time frame. So we're not gonna engage today. We're gonna engage on Thursday and Friday. So we just watch and do forward testing and backward testing. So you see the London, the quality, London high and low. Right here, London high was taken. That's the London high right there. Here's the 5-minute time frame. We do have the London high and low right here. Sorry, right in this for today, right? The London high was taken. So let's see, and then it make a lower high. So it can be a bearish signal right there. Okay. Yeah. Let's see how it's folding today. So the first move is very strong to the upside right there on the 1 minute time frame right there. So we have few fellow gap right here. The level right here is on 15 minute time frame is a bearish order block, but it breakthrough. Let's see. There here you see this order block, right? Fair value gap, retest, up block, keep going down. So right here breakthrough, that's order block, and that become our bullish breaker right there. Let's see. Let's see, it create another candle up here, create fair value gap, retest, go up. That will be a good entry first. But if you look at the 1 hour time frame, you can see that it's still bearish, right? This level is very important. It's a weekly level. It's level right here. We annotate right here. It's a order block. December 20 for weekly level. In order to be bearish and bullish, they have to break through this level on high time frame. That's our anticipate right there. Look at the 1 hour time frame. Let's see. So at 1 hour time frame, we see this bearish breaker is still whole, is still valid. Well, if we want them to, if we want to engage in long, we want it to break above this one. See right there. Here a tune color right here. Maybe this color. Let's make it transparency. Yeah, this is a bearish breaker right there. You see, it break to that bearish breaker, retest a couple of times, retest a couple of times, and it go down. However, it not take out this liquidity. It gives you something to think about, that it go up here and it's gonna come down and take this liquidity. So that's our anticipate right there. It bullish right now in the low time frame, but in high time frame we still in the bearish scenario right there. See that? That's our time frame. So for 1 minute time frame, we see any setup. Okay, so break through this so-called resistance range, right? And then retest, gonna go up. You see the order block right here, filler gap right here. This is retest order block. Oh, this is an order block. And here filler gap and retest this order block. And go up. But one more thing we can see that it's open up above the new week opening gap, so that it can be a bullish signal right there. Bearish, it just open, it just go above the new week opening gap, and then it get rejected and it going down. Right here on 5 minutes, you see the new week opening gap right here. So let's see. Wow, so that means this source setup is no longer valid, right? It break through. Let's say it close above this. Wow. So buy side liquidity taken. All right, the PMI just released. So it's a product consumer, and it is for producer, manufacturer, something right there. Let's look at the calendar real quick. So we have a PMI composites at 9:45, which is 9:45. So the consensus is 46.0. Right, what actually number? What actual number? I don't see that. That's strange. Another thing I want to point out is that the VIX for 3 months versus the VIX for 1 month is above 1.2. So that's a bearish signal right there. So basically they anticipate the volatilities in the next 3 months will be higher than the current one. So you see this order block right here, buy side liquidity taken. It move away the order block and create fellow gap and it retest. Right, a retest right here, and it's gonna come down. Maybe come down to the week opening gap. So basically, the PMI is better than expected. Or a negative one, PMI. Let's see. PMI index. It's a Purchase Manager Index. So Purchase Manager Index pre-production current trend. So that means it's positive because increase in July 4.90 and expected only 4.6. So it's a bullish signal right here. You see the PMI for July 4.9 versus 4.6.4 for 46.4 expected, so it's better. That means the economy is growing. So let's see how the markets react to this new. We see that it reacts strongly at open 9:30. But now let's see if they make any retracement, turn to reversal, or just retracement and continue to go up. But so far, I think we still see they stay below the order block, bearish order block right there. So on weekly time frame, it's still bearish. Bearish in the sense that it's below the so-called resistance level that we identify, or supply level we identify, or bearish order block according to ICT concept or language right now, which is we put right here. Wow, I'm telling you, you can see that this order block, it take out a buy side liquidity, and then huge gap down, gap, further gap, retest right here. You should go in here. Let's say we check this trade. Alright, is what the setup for this one? 48. Setup is order block, huge displacement and further gap and retest. Target new with opening gap. Alright, let's see if we take this trade, what's gonna happen. Here's our order block right there. We should say something real quick. We say buy side liquidity, just rate it. So our target new week opening up. Wow, look at that candle. You see, it bring very fast. So it's gonna check out the London low or this low. On a 5-minute time frame, you will see. Right here, it may check out this low or this buy side liquidity. And our target come out all the way here. So let's see. Wow, this candle brings so fast. Something going on right there. Flushed out real fast, real quick. So right here, it's just a pull trap. It trapped the people who try to go long. So not much buy side. No longer have a buy side liquidity. Yes, it's gonna come down. Got lots of people buying, right? And it come down. All right, so we see this right here. We see anything right here? Wow, look like, I don't know, on a 5 minute time frame, it look like a barrack right there. You see, it's a huge auto block, and then it move away from the auto block, create a fair value gap right here. You see, and then retest at 10, and it's gonna come down. I'm gonna go short now, go short now. Remember our short right here still valid. Let's see if we can continue to go down. So let's see what's going on right here. Let's see if break this one again. Let's see if break this one again. It's a bullish breaker from 50-minute time frame. We wanted to break it and stay above that, so it's bullish right there. So remember, we enter our trade where? Right here, right? Then our order block has to be here. So 10 more minutes, we will reach 10:30, which is by the DR model. We will know the high of the day and the high or the low of the day. Let's see. Well, if we go here and we take a look right here, right, this is our order block, fair value gap, retest right here, retest one, retest twice at 55, then we can check this trade go long, and the target gonna be up here or this buy sell liquidity. Let's check this setup to see how it work out for us. Is the test. So on the block, retest. Setup buy sell liquidity or sell liquidity. Right. Entry time 55. Perfect. Yeah, right. Right here. 55. Wow, beautiful time of entry right there. See setup, do it. No hesitation at all. Ah, come on. Right here. Oh, I need to get this. Here's the annotation right here is the sell liquid right here. or taken. So it's safe to engage in long when we see that. And you know that on Monday is a range day. You're not gonna make big move. So it's very safe to go in there and take the trade right there. And our target should not be the sell side liquidity, which is take the conservative, which is a M5, you know, resisting level. Okay. And then M15, I mean 5 minute time frame. Gonna be a breaker. Oh, order block. So bearish breaker is a bullish breaker is a bearish order block. So our target should be this right here, right? Right here. We identify our target right here, right? Which is right here. This will trick at a bearish order block. It will retest this one. That's our target. And then it also trick at a bullish breaker. If it break above and stay above there. That we hit the target right there. But if we put the target as the buy sell liquidity, we're still waiting right now, and we may experience a little bit discomfort right here when it tries to pull back right there. So let's see. Alright, let's see. You see in the 1 minute time frame, we still check this trade because it's a huge order block right here. And you see the fair value gap is implied for a value gap. It's not just fair gap, it's not qualified fair value gap, but it's implied fair value gap, and it retests, and you can go in and go long. That is set up, and target gonna be right here. For some reason, we get distracted. We don't see this setup coming or forming. We just get scared when we see it really drop. But remember, our relationship to market should not be scare or fear. It should be above fear. We love the markets. We trust the markets because the market will bring opportunity to us. We have to approach that with that mindset. If we approach the market with a mindset of fearful and the market going to take the money from us, then we will stay in fear. And when we are in fear, we not make a right decision. We not stay calm. That's why we get a little bit panic when we see a huge drop down. We thought it's gonna come down, but it's not. It's just a setup for us to go long, give opportunities to go long. If we approach the market from the mindset of a trust and love, then we see the opportunity. But if we approach the market with doubt and fear, then we just see the problem. We say, oh wow, we're not gonna take the trade because we fear, we're scared, right? So that's the mindset that we are trying to build, try to develop right there. We have to develop a mindset that trusts the market, love the markets, because the market provides you opportunity, not problem. If you want to go long, then perfect, right there, going, take the trade. So you want to buy at the bottom and sell at the top. If you want to lose the money, then this is the best position to lose. You lose very little. But if you let it go here, you lose more. All right, we need to wrap up here. And let's see in the DR model, what we see right here from the DR model. So we get a rejection of at the implied DR high. That means it could coming down. So that's the DR model right here. We have the indicator right here. Let's give 2 more minutes. It will tell us, it will show us DR high and then the DR low. Let's see. All right, 1 more minute. It will be 35, 10:35. Let's see how this candle closes. Remember, this is seller already taken, so it may go up or it may go down, right? Market structure shift, what they say. She's order block and she fell up like that. It's a nice setup right here for short also. Okay, so now 35, 10:35 now. So according to the R model, we know the high of the day and the low of the day right here, either of them. So if this is the high of the day rejection, then it's gonna go down. It's not gonna violate the high of the day. However, if it's the low of this one, then it's not gonna violate. It's gonna go up and stay above this level. So that's the R model in a nutshell right there. All right, thank you, and talk to you later. Bye for now.